Hello traders, Gary Wagner here. It is 10:37 in Honolulu, 4:37 in New York on Wednesday, 25th day of October 2023, and this is the Daily Report for Gold and Silver. After 2 days of consolidation, we do have a nice moderate move to the upside in gold. Currently, the December contract is up $8.80. That's a net change of 0.44%, taking an ounce of December gold to $1,994.90. It did trade just shy of $2,000, trading to a high of $1,998.60. This first chart is a daily Japanese candlestick chart. We can look at the recent move that began at the beginning of October up until now. And what we do see today that's different than what we saw on Tuesday and Monday is that we have a differential between the open and closing price. It's green. That suggests that we have some bullish momentum re-entering the market. In terms of key areas of support, I draw your attention to this line here, coming in at approximately $1,983. That is based on a fairly long data set and fib retracement from the high that occurred in May, well over 2,100, down to this recent low at approximately $1,820. So the 50% retracement line is what's coming in, and that's what I am marking as support. We still have resistance at 2,000 to 2,027, and I'm getting 2,027 off of these tops here. But it's all going to come down to tomorrow's GDP report and, of course, the PCE index that comes out on Friday. Next, I do want to look at gold through the eyes of a Japanese average or Henkin Ashi chart. We can see how strong the trend was, no lower wicks, and very strong and large body size. That is up until Monday. On a standard candlestick chart, as you remember, they were basically dojis. But even on a day like today, we have upper and lower wicks, and we've had that for 3 consecutive days. That does tell us that at least for now, according to this type of analysis, the trend has weakened and it is consolidating, in my opinion, taking a pause before it makes its next higher move. And I truly believe that 2,000 will become a level of support rather than resistance. The dollar did move higher today, gaining about 0.25%, with the index currently fixed at 106.35. We are definitely near the upper end of the range. The highs that came in recently came in just shy of 107. We are at 106.35. Lastly, I do want to take a look at silver. Silver declined by 11 cents today. That's almost 0.5%, 0.47%, taking the most active December contract to $23.50. On a technical basis, we could see silver move lower. We're looking at 2 particular areas. This area that occurred at the end of June, and this low that occurred mid-August, coming in at around $22.30. That is where I currently peg major support. Resistance, though, is a little different. I think that resistance is right above $24. It's based on this top, but we also see some tops that come in a little bit higher. The move in silver will be sensitive to tomorrow's GDP report because of the industrial use of this precious metal. But the one thing that we can say is the predominant safe haven assets continue to be gold and the US dollar. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.